The following is a sponsored program paid for by First Alliance Credit Union. Welcome to Good Money Moves, featuring Jenna Taubel from First Alliance Credit Union and Andy Brownell. Here's Andy Brownell on Rochester's News Talk, 1340 KROC AM and 96.9 FM.
Welcome to Good Money Moves. I'm Andy Brownell with Jenna Taubel, AVP of Marketing at First Alliance Credit Union. Hi, Jenna.
Hey, Andy.
Last week, we talked about inflation.
Yes.
And its less than positive effects. So what is the Good Money Moves topic this week?
Yeah, today I wanted to dig into a topic that I think everyone knows a little bit about, but is always a good topic to discuss when it comes to making good money moves, and that is credit cards.
All right.
Yeah. But first, I have some fun credit card stats, which I haven't shared fun stats in a while.
No, you haven't.
But I used to do that all the time. I came across these ones on a website, Forbes, and then one that's called Expensify.com. So they're just interesting to me. So in the U.S. alone, card transaction volume hit over $9.5 trillion in 2022.
That is crazy.
That's a huge number. That's a huge number. And 82% of adults in the U.S. have at least one credit card. 82% as of 2022. So it's probably more now.
But I wonder, how do you even survive without one?
I mean, I do, but it's not easy.
Well, okay, I guess I take that back. Some form of plastic, a debit or a credit card.
Yes. Yeah. Well, yes, you have to have that for sure. You can no longer exist in as a cash society most of the time, but that's a whole other topic.
Okay.
So at the end of 2023, the average credit card debt per borrower was just over $6,000, $6,360 to be precise, which is actually 10% higher than it was in 2022. So we have hit a new all-time high as of the end of 2023, and as far as credit card debt is per borrower is concerned.
And that's of all credit card holders, right?
Correct. Yep.
Not people who do not have credit cards.
Correct. Yeah, that's credit card debt alone. 51% of U.S. cardholders carry a credit card balance month to month. Half. So just under half are paying it off or not using it, and just over half are carrying a balance month to month, which is where those interest charges come in. And interesting, in the Forbes survey, this is actually a survey from February of 2024, so it's pretty new information. They said that 35% of people use their credit card to earn rewards. Yep. Great reason to use a credit card. 33% use it because they feel that it's safer than carrying cash or a debit card, which can be true. And 28% use it to cover expenses that they can't afford. That's not such a great reason.
That's not.
But understandable.
But the safer than cash, an aspect of that as well is I use it to make these larger purchases because oftentimes you get a better warranty.
Yeah. Yeah. And we're going to dig into all of that.
Oh, okay.
In the show today. And the last statistic that I have has I can't say absolutely nothing to do with credit cards. It has something to do with credit cards, but this is really more I found this fascinating. Minnesota residents have the highest average credit score at 742. That's a darn good score.
Way to go, Minnesota.
Good job, Minnesota. And I like to think that we, Andy, have had an impact on that because we're talking about making good money moves all the time. So
might as well take
shameless plug.
All right. So when we first started talking about this, I brought up credit card, debit card. Mm-hmm. Maybe this would be a good time to explain the differences.
Yeah, that difference between them, great question, because especially if you're new to managing your own money, you might not truly understand the difference. So They are very similar, right? They look similar, they function similarly. They're both these little plastic cards, or, I mean, although virtual cards are gaining significant adoption in both credit and debit cards. But point being, they're the little plastic cards that hold information about you and your account, and it transmits that transaction information to and from your financial institution, right? So they function similarly, but in different ways. So a debit card is a plastic card that holds information about your checking account. You can't really have a debit card if you don't have a banking account. Some institutions will allow you to have a debit card for a savings, but usually they're attached to a checking account. So when you make purchases using that card, the card is transmitting your banking information to the store, and the funds are directly withdrawn from your account and given to the store, the retailer that you're buying things from. So before there were debit cards, people mainly used cash and checks.
Checks.
Thus, the reason it's called a checking account, right?
And very few places take checks nowadays.
This is true. Very few people use checks nowadays. Credit cards now, they're just a little bit different. They are not tied to your checking account, and they are actually a unsecured line of credit. And the credit card is how you access the funds on that line of credit. So any money that you're using on that card is being borrowed from the financial institution that you got that card from. And, typically you have to pay that back within 30 days or you'll be charged interest. So it's really critical to understand that the money you spend on that card isn't technically yours. It's a loan from the credit card company that you are expected to pay back. So one is using the money that you have today. That debit card is using the money you have today. And then the credit cards are actually using funds that you don't have yet. You have to pay it back with future earnings.
Sure. You're taking out a loan.
Yes.
Whether it's a long-term loan or a short-term loan will be up to you.
Exactly.
Okay. Now, do they both affect my credit score?
No. So debit card transactions are not going to show up on your credit history. So with a debit card, you're simply accessing the funds that you already have. The credit card, however, because you are basically taking out a small loan every time you use it, you're building credit history, right? And this history then reflects your financial behavior with that specific financial institution. And that includes how much you borrow and whether or not you're making responsible on-time payments, right? So your credit score, again, if you remember how we've talked about this before, it's really it's a snapshot of your history and how you've managed your debt. So, and it's used by lenders to assess really, are you too risky to loan money to? Are you in a good financial position? Should we loan money to you? So that's why a credit card would be reflected on that, in that credit history, in that credit report, whereas your debit card would not.
For the credit report, the score, is it the best scenario as far as the reporting concerned if I pay my balance off every month?
Yes. Yeah.
Okay.
You should be paying your balances in full every month. That is a good thing to do.
Yeah. So that's the best scenario.
Exactly.
Okay. Is there any, rules, hard and fast rules on, this is the situation I should use a credit card for, and this is the situation I should use my debit card for? Yeah,
great question. And like so many answers that I give you on this show, Andy, it depends. You should get that on a t-shirt. There really isn't like a right or a wrong answer to that. It really comes down to personal preferences and a lot of times just your financial habits. However, there are definitely advantages and situations where each type of card really shines as the better solution. And it's important that you understand what those are to make those informed decisions when those times come.
Okay, let's start with the credit cards.
Yeah.
Any advantages or the strategies, regarding them that I should know about? Yeah.
So credit cards are best used in certain situations. So shopping online, purchases, and are going to be actually protected under the Truth in Lending Act. So what that means is that they are limiting your liability for unauthorized transactions, which can really help provide some peace of mind if you're making online purchases, especially in kind of today's digital age where online shopping is becoming increasingly common. I mean, I shop online for my groceries now, for crying out loud. And anytime you're shopping online, the opportunity for fraud is just high. It's high. It's rampant online. It's so easy to get tricked into buying something from a fraudulent site or having your information kind of hacked from a site that maybe doesn't have the best security if you're buying from maybe smaller retailers and things. So that protection kind of helps protect those transactions and keeps you from taking a hit from your actual checking account, right? You might not get that money back if you used a debit card, whereas you would be more likely to get that refunded if it was using a card.
Okay.
Now, and you kind of mentioned this one already. So making large purchases, a lot of times credit cards can offer warranty protections, and they can provide some additional security for those big ticket items in that way. Some cards even offer extended warranties on certain purchases made with certain cards. Again, just kind of offering additional protection against like defects or damage for some of those much larger purchases. A lot of times, you think like major electronics and things like that can be really good to use a credit card to make those purchases for that reason. Another really uncommon one, right, is traveling. Some credit cards offer fraud protection and travel bonuses to places like hotel and even hotel discounts. And just kind of be mindful, though, of foreign transaction fees. Certain cards do charge you for different fees if you're, traveling internationally and things, which can really actually start to eat into your savings, especially if you're traveling abroad. But side conversation. We can talk more about that later.
And plus, if you're doing that kind of traveling, you should probably notify your credit card company anyway that you're going to be.
100%. Yes, absolutely. Yeah, you don't want your card to get shut off because they think somebody stole it. But it's also really helpful to have access to a credit card if you're facing a financial emergency. Using your card can help prevent you from having to completely deplete your savings for unexpected expenses, but it's going to be really important that you remember to repay promptly to avoid any future financial strain from that situation. So credit cards can serve as a financial safety net when you're kind of in this time of need, because it does provide you that immediate access to funds when you're facing these unexpected expenses like car repairs, medical bills, things like that can help you resolve that quickly. But you do have to be mindful that it's not the best solution to rely on all the time. You really should still have either, a rainy day fund, an emergency fund that you can tap into for unexpected expenses like this. But it can be a great way to just get that taken care of quickly. And then you can potentially use funds from that emergency fund to pay down the card. It just depends on the situation.
Sure. All right. We're talking about credit cards, I guess how to use them responsibly, how to use them to make good money moves. And we'll continue after a quick break with Jenna Taubel, First Alliance Credit Union, right here on News Talk 1340, KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340, KROC AM and 96.9 FM. We're talking good money moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340 KROC AM and 96.9 FM.
Welcome back. Good money moves. I'm Andy Brownell, Jenna Taubel with First Alliance Credit Union, of course, with us. And our topic today has been credit cards. And we started the discussion of when is it appropriate or advantageous to use a credit card. So I guess maybe that leads to the next question. When would that apply for a debit card?
Yeah, using a debit card is really more ideal than a credit card when you're on a tight budget. So because debit cards are going to help you stick to your spending limits, right? You're limited to the amount of money that you have sitting in your account right now. And it can really help you manage your money using a debit card, but also by setting up alerts that can help prevent overdrafts, really ensuring that you don't like accidentally spend more than you have, right? Use the technology available to you to help you
Sure.
manage your money. But probably the biggest one is you're not incurring debt, right? You're relying on the money that you've already earned versus the money that you'll earn in the future
Sure.
to make these purchases, because that's what you're doing when you're taking out a loan. You're relying on future earnings to pay for something you're getting today. And so that's really what a credit card is doing.
And the debit card is essentially a more convenient way to access your actual
cash.
funds.
Yeah. It is. But you're also supporting small business when you use your debit card. So a lot of times small businesses will prefer that you use a debit card or cash for transactions, specifically because credit card processors charge businesses fees to process their transactions. And so by using your debit card at local businesses instead of a credit card, you can actually kind of support your local economy because you're helping that small business potentially reduce some costs. Similarly to avoiding interest and not accumulating, you're also avoiding a lot of fees. Debit cards don't typically incur transaction fees, or there's usually not a monthly fee attached to your debit card the same way there is with certain credit cards, right? So this is really going to save you money over time, especially if you're not someone who frequently makes purchases that qualify you to have a credit card or that you would need a credit card for. And again, you're kind of going back to the interest conversation, or you're not accumulating debt. You're also avoiding high interest rates, right? Debit cards don't have interest rates. It just is what it is. And sadly, credit cards right now, you could be paying up to 30% in interest in some cases. So,
oh my gosh.
It's crazy. It's crazy out there. That there's definitely a reason that you need a debit card still.
Yeah, if you're a person carrying a balance, oh my goodness, that's at that interest rate. Ouch, 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 ouch.
Yeah.
Okay, so what would be the advantages of using my credit card more often?
Yeah, I would never say you should only ever use your credit card or only ever use your debit card necessarily. So I think some of the advantages of the credit card, again, are that fraud protection, right? Credit cards offer better fraud protection than debit cards in general. They really do help limit your liability of unauthorized charges, which, again, just can really give you some peace of mind when you're making purchases, again, especially online and traveling. Those are kind of those big moments when you're likely to experience some fraud. But the dispute resolution process with credit card companies actually can be a little bit more streamlined even, and they typically have a quicker resolution for fraudulent charges in a lot of cases. And if you encounter a problem that you made with the purchase with your card, the credit card company can often help step in and resolve that issue on your behalf. And I think another one to think about is really just the separation of funds. So using a credit card keeps your bank account separate from online transactions, really just safeguarding that source of primary funds for you. It kind of just puts that additional block.
It's like a firewall.
Yeah. It just helps protect your savings and your checking in the event that your card information is compromised. So, and best of all, if you're using it responsibly, it's going to help build your credit history, which is always a good thing. Building a positive, credit history is going to benefit you in the future. So, your credit history is an important factor in determining your credit worthiness, like we talked about earlier in the show. And so using that card responsibly is going to help you really establish and maintain good credit over time.
Okay, that sounds great.
Mm-hmm.
Very advantageous, but what's the catch?
Yeah. Well, just remember, you do have to pay your balance on that credit card in full to avoid interest charges each month. And by doing this, is going to help you avoid accumulating that debt and really save you money in the long run because you're not paying those interest charges and you're not having debt roll over month to month and then building up and accruing interest, right? So it's really important that you are spending what you can afford to spend, even though you have a credit card. And then staying on track with that budget still matters. Because if you're not keeping track of what you're spending on your card, you might actually overlook an unauthorized charge on your card and not even realize that that's going on because you've been overspending or you're just not paying enough attention. So you do still have to monitor that very closely.
And that's weirdly because if you use them correctly, they can actually help you keep track of things because the way they automatically categorize some of these things that you spend money for.
Yeah, exactly. Yeah. The one thing to definitely avoid when it comes to credit cards is cash advances. They usually come with very high fees, and the interest rates associated with cash advances on credit cards are usually much higher than your normal rate.
Yeah.
And it can be really tempting to use your card for a cash advance when you're in need of like some quick cash or something, but the fees and interest charges, they just really add up quickly, and it is a very expensive way to borrow money, so if you are in a situation where you need quick cash, like if you don't have it in your checking account, I do not just avoid cash advantage. Like, don't do it.
Don't do it.
And again, just use your card responsibly. Manage your card really wisely to just, again, it's going to limit your financial stress. There's nothing more stressful than having tons and tons of credit card debt that is getting out of control. Really just use your card for purchases that you can actually afford to pay off in full. Avoid carrying a balance whenever possible. Use your card responsibly to help you build a positive credit history and really improve your financial health over time. That is, if you're using your card responsibly, you're going to see your credit improve and you're going to feel in control of your finances.
It's a great tool if you use it correctly.
Exactly.
Okay. We're going to take another quick break. We'll be back in a moment with more Good Money Moves here on News Talk 1340 KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340 KROC AM and 96.9 FM. We're talking Good Money Moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340 KROC AM and 96.9 FM.
It's Good Money Moves. Jenna Taubel with First Alliance Credit Union here. I'm Andy Brownell, and we have been talking about using credit cards wisely. I guess, could you give me an example of a time when you absolutely would use the credit card? And why would it be that way?
Yes. A great scenario to use your credit card is if you plan to travel overseas. A credit card combined with like some low denomination currency in the country that you're traveling to can actually really easily get you what you need while you're traveling internationally. It is still good to bring your debit card as a backup, but only use it if you need to get money out of like a reputable ATM while you're there. And the reason I say this is certain credit cards, particularly those that are tailored for like frequent travelers, and they maybe offer rewards, and they often include things like travel insurance as a benefit. So this coverage can then kind of extend to various scenarios when it comes to your travel. So things like flight delays or rental car accidents. These are all things that when you're traveling, especially internationally, you really do need that additional kind of protection for yourself, because one canceled flight and the whole vacation goes awry.
Yeah.
So it really is advisable to inquire with your credit card issuer about any availability of travel protection and really understand the specifics of the situations that it covers. But just be mindful, like some credit cards are going to have foreign transaction fees and some are not. So if you do plan on traveling internationally, I recommend becoming a First Alliance Credit Union member. Shameless plug happening right now. Because if you sign up for our credit union's rewards credit card, not only do we have no annual fees on that card, we have extremely low rates when you compare them to other rewards cards out there. But you also don't have to pay any foreign transaction fees on that card. So not only can you earn rewards while you're traveling, but it's not going to cost you nearly as much as if you had used a different card. So that would be a scenario in which I would absolutely have a credit card that I plan to use, would be if you're traveling internationally.
A no-brainer. Okay.
Mm-hmm.
Great information, Jenna. But again, we've just touched the surface of the issue.
Mm-hmm.
So if I want to learn more about credit cards, how they work, debit cards, how they work, the advantages of each, where can I do that?
Yes, as always, I encourage our listeners to visit our website, firstalliancecu.com. You can subscribe to our blog. We release new financial tips and advice there every week. You can listen to past episodes of this show at firstalliancecu.com/podcast or on krocnews.com. You can also subscribe to Good Money Moves on Apple Podcasts, YouTube Music, and Spotify. And if you love our show, please leave us a review on your favorite podcast platform. And of course, I strongly encourage you to reach out to our team at First Alliance Credit Union so they can help you start making good money moves today.
That's First Alliance Credit Union, federally insured by NCUA and an equal housing lender. Jenna Taubel, thank you so much again.
Absolutely.
And we'll chat again next week with another episode of Good Money Moves right here on News Talk 1340 KROC AM and 96.9 FM.